morning, everyone, and welcome to the PivotBoss pre-market video for Friday, November 7th, 2025. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Quick note here, this will be my last pre-market video here for the next several days. The next one will be next Friday here, so for the next 4 trading sessions, no pre-market video. Please see the market outlook that we posted here Wednesday afternoon. 2-hour market outlook that was posted there with a ton of analysis for futures, crypto, and a ton of stocks. That'll get you going here for the next several days. All right, let's go ahead and take a look here at the ES in the daily time frame right now. Trending lower since the FOMC key level here that was posted October 29th. The Fed level right there, drop in rates 2 days after. We saw selling pressure of levels above that zone, and we have since sold off. This right here looked like it could have been a low, but it just could not hang on by the end of the day, and we took out the mid and have continued to slide. This has been a week long of weakness. The previous week was all compression. That was the previous week's range right there, compression. Here's a Monday, and then you break Tuesday, and we've continued downward Wednesday, Thursday, now into Friday. Big time pullback here. This pullback now in line with what we tend to see here for the ES recently, you know, in this kind of zone right there. That's what we've seen a lot of recently. You get that pullback of some certain magnitude, and then you start to work your way up. Do we finish the week on lows and then turn around perhaps next week? If a turnaround is going to happen, failed new low at the previous week's low and rally back up the range here next week. So again, today may continue to be quite a bit bearish here today. Not anticipating a major recovery of any sort here, but we could see a recovery back above the previous session's low that opens up a little bit of two-way range bound action. So again, downward bias overall, but we're coming up to a point where a rejection may occur for the medium-term turnaround should one develop. All right, looking at the NQ. Similar price action here in the NQ. Both the NQ and the ES taking out the previous month's midpoints. Rejecting here near the upper end of the previous month's range. Do we get back toward the previous month's low prices? That's the Friday key range lows, basically, is the previous month's low. Do we wipe that out all the way back down? Or do we continue to see higher lows develop? This is kind of what we've seen in the uptrending channel here. Is just higher lows, higher lows, higher lows. Do we get another round of higher lows? Perhaps off of 24.8. Again, next week, we may flush early and then check mark higher and start to work our way up. That's kind of how it played out here. This was a Thursday, Friday drop. By the next week, we were running back up. So, again, we've seen quite a bit of weakness in the near term, but this market has been resilient. If we start to fail at major market structure, that's where things can really turn down, and now we're working toward a broader pullback. From our market structure perspective, you know, you start to fail back below key levels here. 24,500, for example, would be a big level. That would open up a return back toward 22 and VWAP below, which could be a tremendous longer-term buying opportunity here should we get to those levels. But right now, taking it a little by little here as we've been trending up above R3 for the most part. All right, looking at crude oil. This one's up a little bit right now. This one's getting some false starts here to the downside. The previous session pulled back, dropped hard, but also bounced. Bounced late in the day, finished near the midpoint of the session. When you have a high range day and finish near the mid, you can tend to see a trading range develop. And yesterday, a key range did develop from that high, low, mid. That's now an intraday key range to continue to watch, and we're inside day, and we could continue to remain inside day here in crude oil, but with a modest bearish bias and a medium-term bearish bias within this downward trending channel. So we're very close to opening up that 6-point breakout move that we've been talking about. And next week, again, keeping an eye on that 59 zone, because if we start to really push through 59s, it really opens up the downside here. So that's going to be something to watch. We did get that key range solidified with a test into 59.28 yesterday. That key range is now in play, And if we did get a downside break here of about 6 points, it takes you down toward about the 25% extension here in the 54. So this is going to be a pretty solid move here to the downside up ahead. And if we got that move, it could be a fade right back up. So 6 points in two directions. All right, looking at gold futures. This one's up marginally at the moment, about 1/3 of 1% right here. Still in the developing range. No breakout yet. No attempt to break out either. This thing's happily trading within this kind of developing 8 or 9 day range now. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days in the small range. You can add a few more days if you wanted to over here. If we quantify that, you're going to get a massive reading here. That's your 9 day range right there. And that's your compression here, right? So average would be 357 because we have had significant volatility. Current is 158, so we're at 41% of ADR. That's pretty big compression right now. But are we expected to go get 357 points when we've come out of a high volatility market? Perhaps that might be too high up. This type of compression right here could lead to a massive move of that magnitude, but are we still in that high volatility environment? That's why I mentioned before, maybe 250 to 300 points is a good amount for expansion, like a high probability amount. And when we're ready to go, perhaps next week, it could be a pretty aggressive directional week. So whichever way it goes, 250 points easy, and as much as 300. All right, looking at, let's take a look here at the YM. The YM right now, 47K. We're below that level at the moment. And currently trading 46,913. We've been trending downwards since the FOMC key level, and it's been taken offered. You know, usually when you take it offered like this, you continue downward until you see a strong low, and then you come back to the level. So at some point down the road, that's going to be the target. 48K will be the target. Is it going to be the target to end the year? Is it going to be the target soon? What if we get a rejection next week and return very, very quickly? So we'll see how that target is reached at some point down the road, but right now still trending down until proven otherwise. If today's going to turn into a range-bound day, needs to hold this edge, the previous session's low. Early thrust reversal right now developing. Decent little reaction on the low too. Not bad, but this thing is trending down right now. Intraday, VWAP sloping down. Trend confirmed sell signals firing to the downside intraday. Going to need a good strong reaction to really get things going to the upside. So right now trending lower here until proven otherwise. But do we get some sort of medium term turnaround next week? Good channeling behavior. Do we get some sort of reaction and go next week? All right, looking at Bitcoin. Bitcoin back to the 100K level. Dropped below that level here just an hour ago, an hour ago we were below 100K and we bounced back. So the initial reaction is exactly what we thought. The market is watching this level, but also the initial reaction wasn't as spectacular as it could have been. The entire market is kind of limping, and you can see the quick retest. If this was a super strong reaction, we'd be here by now. You know, this thing could have already really rejected, as we've seen previously in our key levels down here. When we finally rejected it, this thing was gone. We're not seeing that same behavior here, and that was the fear there, was that we weren't going to get that participation, at least not initially. With all of this heaviness and a lack of participation, do we now see an overwhelming of the 100K level? And does that lead to the next 33% correction? Again, if so, 75K would be a tremendous in for the next major run to 100, 125, and 150. So again, keeping an eye on this 100K level. Not saying it can't bounce from here, But Sunday evening needs to have a massive opening performance for a Monday move to really get this thing going off these lows, and it can happen. Sunday night is when things can happen for a market like this when it's limping along. But man, if there's a failure, if there's a transition phase, it could get very bearish very quickly. All right, looking at Ethereum here, similar thing here. This one's already failed. We talked about the 3,700 level before. You see this rounded top, you see the transition, and here we are not really responding to year-to-date VWAP, and the 200-day moving average value pocket is sitting there, it's limping there. Is this going to be taken offered? Look at VWAP, 3 standard deviations below VWAP here. That's S3. That's below 2,000 right now. Your 100% key range target, of which we just broke this week to the downside, is still 2571. We're 32. That's 700 points still away. So there could still be quite the move down. Like I said, Sunday evening is going to be very, very important for this market. If we're coming in through VWAP, things could get very aggressive very quickly. 2200 could be right around the corner. This could get very interesting very fast. So keep an eye on Ethereum heading into the weekend. All right, that'll do it for now. Let's see how this plays out here heading into the weekend. Good luck, trade well. Remember, this will be the last pre-market video here for a little while, but I'll try to check in here with the trading room here each and every day while I'm out. All right, everyone, take care. I'll see you soon.